Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the dollar index, which is also known as the USDXY, that measures the greenback strength against a basket of six major currencies, rose over 0.5%. And as you can see, rebounds from 95.75 and now posts an intraday high around 96.30. It is assessed from the technical outlook that if the MACD does end up mirroring the RSI, could put a bigger bullish potential, that is from the rally overnight, and see climbing towards the recent highs around 96.80, 90, which is what I view, and maybe beyond to 97.40, 80 area. Looking ahead to this week, the US Federal Reserve, or the FOMC that is due to release the minutes of its December meeting on Thursday, where it is expected to lay out a timeline for its ending to its pandemic era stimulus package. Along with that, the central bank is also expected to hike 3 times this year, but it will depend on how the inflationary outlook is seen, which is viewed around 2% at year, and also the unemployment ideally around the 4% level that it defines as a maximum employment. Also this Friday, the eyes turn to the US job numbers, where it's forecasted is to see a rise of 410,000 jobs added in December, and from that the prior dismal number of 210, which was released in November. Nevertheless, it is anticipated we may see a slip also in the unemployment rate from 4.2 to 4.1. If the pattern it does hold bullish, then if we view to the euro, the outlook you can see here rejected near that 114 cap and now puts the monthly outlook, which is 111, in a prime position for the bears, and therefore could see a further tumble. But do keep an eye on the level on the supports, that is at 112.70, and a break there would see a further slippage to 112.25 and reassess. The Australian dollar displays its biggest daily loss in a month after plummeting nearly 1.5% on Monday. After a brief challenge to the top side to that 60-day moving average, the market rejected clearly and plummeted from that area of 72.75, 90 to an intraday low, which was around, if we just grab the value, which was around 71.85, close to that this today. It is viewed, though, that any retracement may actually fail to sustain due to the close under 72.25. With resistance seen around that level of 72.45, I anticipate the market will head lower and look towards 71.60 and reassess from there. Interesting to see for dollar yen that the market continues to climb higher and clears the 115.40 area and posts nearly a 5-year high. From a technical outlook, we are extremely overbought, and the ADX is overheating as the bull trend continues for around 13 days. It is viewed, though, that towards 116.15 could eventually see a rejection. I do anticipate one of these heavy candles is on the verge of returning, and therefore any advancement may actually find the bulls locking themselves in a bull trap, and therefore see a pullback to at least 115.45 to 114.80. The last challenge to that top side around 135.30 for sterling hit a bit of a snag there. As you can see, the rejection plummeted quite heavily. Still, we're not quite broken yet, but keep an eye on the RSI, as a move through 134.35 may actually see a further weaker play towards 133.90 to 133.30. But until we get that confirmation, still not rule out that is to test to the upside. But overall, I feel the market may have actually reached its potential climb since the rebound of 131.50, 60 area back in late November, early December. So in the short term, some profit taking may be emerging. CAD yen, a little bit mixed and choppy here. As you can see, the prices since the break over 91 did struggle, but now recapturing its momentum. I'd be keen to see how the RSI plays out, because it could actually eventually display bearish divergence and therefore see a pullback towards this baseline, which is seen around 89.2040, which is what I'm in favor of, but I would like a little bit more confirmation. But keep an eye on the bearish divergence. The upside for gold eventually turned around, so the shine was completely wiped off the 2022 start and therefore could see further weaker play into the European session, and keep an eye on that level of 1,788, which is still a little bit of a distance, but nevertheless can easily be achievable due to the RSI breaking down and also the MACD. First of all, let's see if we can take out 1,798 and then down to 1,788. Beneath this level exposes the broad support, which is seen as the bullish foundations at 1,757 to 64. A little bit of a choppy play into oil, but not quite taking out that level of 76.50 as it's held there for 4 days and may in the short term. However, all eyes on the OPEC meeting, which is later today, which may cause a bit of a stir and a bit of a choppy price action in the event that we see a further weaker play to the bear case. But to turn negative, I would like to see them move through the level of 73.30, which clearly is outlined here. But at the present, it seems the bulls are attempting to try and reclaim the previous losses. So let's see how the event comes from the OPEC meeting. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And also tomorrow morning, the intraday webinar will be released also.